Let's start your investment journey.
Hi all, and welcome to another edition of our weekly market outlook report for the week starting Monday the 1st of February. The week starts with China, UK, US and Canada manufacturing PMI data on Monday. On Tuesday, we should be on the lookout for Australian interest rate decision, which will be followed by Eurozone preliminary GDP quarter 4 figures. Moving on Wednesday, Chinese services PMI data, Eurozone preliminary consumer price index for January will be followed by US ADP employment figures, which are expected to come in at 49,000 from previously really bad minus 123,000. US services PMI data is also due. On Thursday, Australian trade balance will be followed by Eurozone retail sales for December, which is expected to come in at 0.8% from previous minus 2.9%. That will be followed by Bank of England interest rate decision and minutes and US jobless claims. On Friday, the day will start with Australian monetary policy statements and retail sales. That will be followed by probably the most anticipated data release for this forthcoming week, which is US non-farm payrolls. It's forecasted to see 85,000 from previously minus 140,000. Also, US unemployment rate is expected to stay at 6.7%. We will also get Canadian unemployment rate for January, which is expected to stay at 8.6%. Now, let's take a look at few markets. Let's start with the DAX or German 30 index, which appears to be forming a corrective pullback. We had Wednesday and in particular Friday fairly bearish days for the DAX. The current price is capped by multiple moving averages 50 and 20, but supported by 200. Key trading level going forward is at 13,600, which is our 50-period moving average and also the cluster of these previous closing highs. So if we see a rally from the current lows into that level and a rejection or a gradual move lower and a loss of these current swing lows at 13,300, that could trigger a continuation of this bearishness, potentially opening the way for the retest of additional downside supports at 13,140, which would be signified by the cluster of these previous highs and lows. Loss of that level could open the way for the retest of 13,000, possibly even down here towards 12,950, which would be our 200-day moving average. Alternatively, if we see a rally and a breakout, an end of day close above 13,600, that could create a short squeeze, potentially opening the way for the extension to the upside. And in that case, a retest of this falling resistance trend line towards 13,700, possibly even 13,800, 13,900, and then 14,000 to the upside. Dow Jones appears to be bearish as well. Yet again, the longer term trend is still intact. We have rising support trend line, but this appears to be a double top formation with a neckline which was lost at 30,750. So oversold bounce back from these lows into that resistance at 30,540, 30,500 and a rejection or a gradual loss of these current lows and in particular loss of 29,800, 29,650 could open the way for a deeper corrective move. Therefore, continuation of this selling pressure, targeting additional support at 29,500, 29,170, possibly even this area down here towards 28,200 over a longer period of time. Alternatively, if you see a rally and a breakout above this area, a retest of that level from above as a newly found support, that would create a short squeeze, potentially negating this bearish setup. extending to the upside, targeting additional resistance at 30,750, 30,900, possibly even 31,000 to the upside. Euro dollar is consolidating sideways. The current price action is capped by 20 and 50 period moving averages. There is a crossover here. Key trading level is at 120, 180, 122 area. As long as that level holds and we see a rally into that level and a rejection or a gradual move lower and loss of these current lows, this sideways consolidation could indicate bearishness, potentially opening the way for the continuation to the downside, targeting additional support at 1 spot 2040, 1 spot 20, possibly even 1 spot 1920. Alternatively, if you see a rally and a breakout above 122, an end of day close above that level and a retest of that level from above as a newly found support, that could create a short squeeze, potentially opening the way for the extension to the upside and retest of additional resistance at 123, 123.40, possibly even 124. Cable appears to be more structurally intact. The uptrend is supported by multiple moving averages, so the current price is trading above 20, 50 and 200 period moving averages. We have a couple of trend lines supporting current trend, and we see this as a sideways consolidation. It's initially supported by 136.40 and initially capped by 137.50. We have falling resistance trend line in daily time frame as well. Breakout above 137.50, a retest of that level from above as a newly found support would indicate an explosive reaction to the upside, targeting additional resistance at 138.50, 139, possibly even 140. Alternatively, if this resistance at 137.50 holds and we see a rejection to the downside, loss of 136.30, an end of day close below that level, and a retest of that level from underneath as a newly found resistance, that could open the way for a gradual move lower and retest of additional supports towards 135.70, possibly even 134.60. Dollar Japanese yen, this appears to be a breakout, bullish breakout here. We are coming to some major resistance on the upside. Key trading level going forward is at 105. Nice and round number. Breakout of 105 could open the way for the retest of this falling resistance trend line and also 200-day moving average and cluster of these previous lows here as well at 105.20. Rally, rejection to the downside, rally and a breakout over 105.20. An end of day close above that level would be seen as a fairly bullish, potentially opening the way for the extension to the upside, targeting 105.60, possibly even 106 over the medium time frame. Alternatively, if we see a consolidation here around 105, rejection and a gradual move lower to the downside, initial support to the downside is at 104.40. Loss of 104.40 could open the way for a deeper corrective move, targeting additional support at 104, 103.80. Lastly, let's talk about gold. Gold appears to be going sideways, nowhere fast in end of day time frame. We are seeing a sideways consolidation here, which is currently capped by resistance at 1870, 1880. A breakout above 1870 and end of day close is required for the continuation to the upside, and then retest of this falling resistance trend line, targeting initial resistance at 1900, which is nice and round number, 1911, possibly even 1930, 1950. Alternatively, if you see a rally and a rejection or a gradual move lower and a loss of these current lows at 1820, that would negate the bullish scenario, potentially indicating the continuation of this sideways move with a selling pressure targeting initial support at 1800. Loss of 1800 could target this swing low here at 1775, 1760 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.